Building upon the previous discussion that distinguished residential from commercial property management under Arizona law, it is essential to now focus on one of the most significant fiduciary duties a real estate licensee has when handling other people's money: the proper management and oversight of trust accounts. Trust account management represents one of the highest levels of accountability in real estate practice. It directly relates to the protection of clients' funds, adherence to state regulations, and the ethical integrity of the profession. In Arizona, the handling of client funds is governed primarily by ARS Section 32-2151 and Section 32-2151.01, alongside detailed commissioner's rules found in AAC R4-28-802 through R4-28-805. These laws establish how brokers and their affiliated licensees must receive, deposit, record, and disperse funds entrusted to them in real estate transactions, including property management operations. The primary purpose of these regulations is to ensure that all monies belonging to others, such as rent, security deposits, earnest money, or maintenance funds, are safeguarded against misuse or commingling with personal or brokerage operating funds. A trust account, also known as a trust fund account or property management account, is a separate bank account maintained by the designated broker to hold client or customer funds in trust. The broker has the legal responsibility to maintain this account and ensure its reconciliation, even if the day-to-day deposits are made by property managers or salespersons affiliated with the brokerage. ARS Section 32-2174 requires that a property management firm establish at least one trust account in the broker's name, clearly identified as a trust or property management account. This account must be maintained at a federally insured financial institution located in Arizona. For example, if a property manager collects monthly rent from a tenant for a Scottsdale condominium, that money cannot be deposited into the brokerage's general operating account. Instead, it must be placed into the trust account established for property management funds, and the broker must record the transaction accurately in both the owner's ledger and the tenant's payment record. Any commingling of personal funds with trust funds, even a temporary deposit, violates ARS Section 32-2151A and may subject the broker to disciplinary action, suspension, or even license revocation under ARS Section 32-2153. The law also mandates strict record-keeping and reconciliation procedures. According to AACR 4-2-8-802C, brokers must maintain complete and accurate records of all trust account transactions, including deposit slips, canceled checks, bank statements, and client ledgers. These records must be retained for 5 years from the date of the last activity. Furthermore, trust accounts must be reconciled monthly, and the reconciliation must match the total of all individual client ledgers to the bank balance. The designated broker must review and sign the reconciliation statement, affirming its accuracy and completeness. A notable case illustrating the importance of proper trust account management is Enri Zhang, Arizona Real Estate Commissioner, 2006, where a broker's failure to reconcile a trust account for several months led to discrepancies between bank balances and client ledgers. Although no client funds were ultimately lost, the Arizona Department of Real Estate, ADRE, determined that the broker's failure to maintain control and perform monthly reconciliations violated R4-2-8-802C. The broker's license was suspended for 30 days, and additional education in trust account management was required. This case serves as a reminder that even unintentional administrative lapses can lead to serious disciplinary outcomes. Licensees also have defined roles and limits when handling trust account funds. While a salesperson or property manager may collect and deliver funds, They may not deposit or withdraw from the trust account without the broker's authorization. ARS Section 32.2174C allows the broker to authorize employees or licensees as signatories, but ultimate responsibility and liability for the trust account always remain with the designated broker. In practical terms, this means a property manager cannot issue refunds, pay vendors, or transfer funds between accounts unless the broker has expressly granted written permission and retains oversight. An important safeguard against fraud and error is the three-way reconciliation method, a standard practice that compares 1. The bank statement balance, 2. The total of all individual client ledgers, and 3. The checkbook or journal balance. When properly maintained, this system ensures that every dollar in the account is accounted for and linked to a specific client. Any discrepancy, even as small as a few cents, must be investigated and corrected immediately. For example, suppose a designated broker in Tucson manages 20 rental properties and maintains a property management trust account. At month's end, the bank statement shows a balance of $28,000, but the total of client ledgers shows $27,950. The broker must determine whether a deposit was missed, a check cleared late, or an accounting error occurred. Prompt reconciliation prevents trust deficiencies and potential violations under ARS Section 32-2151B3. Review summary. Trust. Account management represents one of the most critical fiduciary responsibilities in Arizona real estate practice. Under ARS Section 32-2151, Section 32-2151, and Section 32-2174, designated brokers are required to establish, maintain, and reconcile trust accounts to protect client funds and ensure transparency. Licensees must understand that while they may collect and deliver funds, the broker bears ultimate responsibility for safeguarding these accounts. Violations, such as commingling, inaccurate record keeping, or failure to reconcile, can lead to disciplinary action, license suspension, or revocation. Maintaining strict control over trust accounts preserves public confidence and upholds the professional standards of the Arizona real estate industry. Discussion prompts. Why must a designated broker reconcile the trust account every month? Answer. Monthly reconciliation ensures all funds are properly accounted for, prevents mismanagement, and complies with ARS Section 32-2151B3. What is the primary risk of commingling trust funds with a broker's personal or business funds? Answer. It violates ARS Section 32-2151 and undermines client trust by making it impossible to accurately track client monies. Who bears the ultimate legal responsibility for maintaining the trust account? Answer. The designated broker, regardless of who handles daily deposits or withdrawals. Closing remarks. Trust account management is not merely an administrative task. It is a legal and ethical duty central to the practice of real estate in Arizona. A single error in trust fund handling can damage a broker's reputation and jeopardize licensure. By maintaining strict record keeping, avoiding commingling, and performing regular reconciliations, brokers and their licensees protect clients, uphold professional integrity, and demonstrate their commitment to the standards set forth by the Arizona Department of Real Estate.